Volatility has become a hallmark of this year. How can you best adjust your investments? Senior analyst John Markman, editor of The Power Elite and Crisis Profit Trader, has been studying market patterns over decades. John, we know things right now are not pretty. What should investors expect in the coming months?
People are working. They're buying things. All the consumer data shows that people are going to stores. So I think that we're probably not in a recession at this time, but the Fed seems intent on creating one. So just because we don't actually see any recession at this time doesn't mean that it won't actually be here in 3 to 6 months.
The Federal Reserve is expected to continue raising interest rates over the next few months to tackle inflation.
It's the Fed's desire to push down demand, to beat inflation. Their goal is not to increase consumer activity. Their idea is to squash it. So you can see that the delta between where we are and where we're probably going is quite large. And that's pretty scary.
Inflation is at 8.3%, with the Food at Home Index measuring grocery prices up 13.5% year over year.
It's like we're watching a murder, but it's not a mystery. It's not a murder mystery. It's just a murder. The Fed wants to murder the economy to beat inflation.
John says these are historic times in that sense, but an old investment saying comes to mind.
It's trite, but don't fight the Fed. Don't fight the Fed. Don't fight the Fed.
A strategy to consider?
If they want to participate as a trader, sell the rallies. Every time the market's up like 300 to 500 points in a day, sell it. In a bull market, you want to buy lows, buy pullbacks, and in a bear market, you want to sell rallies.
John, you pay a lot of attention to seasonality in the markets and cycles. What should investors focus on right now?
One of the things I paid a lot of attention to is 12-month forward expectations of individual stocks and the market itself. If you look at the entire year, you have 252 trading days. If you look at the 12-month return of each one of those days over the past 50 years, you can see patterns. One of the most important patterns is a low that tends to happen the second week of October.
Specifically, October 13th.
So here's my advice. If the market goes down into October 13th, close your eyes and buy. Most people don't like to buy into lows. It's hard because stocks are going down, bonds are going down, commodity prices are going down. It's going to be really hard to buy, but as a short-term opportunity, try it, see if it works.
Theoretically, you'd want to hold it for a year, since that's the forward expectation for buying on that date. But in this climate, if it spikes in price a few weeks afterward, take the profits.
Even though the idea is for a 1 year look forward, if you get what you're looking for in a year, in a month, take it.
Last year, Tesla shot up about 45% 1 month after October 13th. John is a big fan of that company. He thinks it's a credible claim that Tesla will become the first $10 trillion stock.
That sounds impossible. What does that even mean? But, at its peak, Apple was a $3 trillion stock. And Tesla's selling computers on wheels. The products that they're building will be the most important way that people transport themselves 10 to 15 years from now, and with autonomous vehicles in fleets rather than us owning individual cars. Tesla, I think, is something that you could buy for a 1 year speculation.
John also favors other big tech names.
I've been a big advocate of technology stocks and growth stocks for the last 30 years. And there are certain growth stocks that I would buy in any kind of environment. One of those would be Microsoft. Another would be Alphabet. Another would be Tesla.
Even if there is a sustained down market, there are strategies to keep your portfolio healthy. Senior analyst John Markman, it is always a pleasure to speak with you. Thank you so much for your time and insights today.
Thanks for having me.